Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. If you have any questions after the webinar, please, the best way to get in touch with me is Discord. My name in Discord is Doug P. And you can also post questions and comments in Bookmap Discord, in the Options-Doug chat channel in Discord. And I'm also on X, formerly known as Twitter, and my name on that platform is @DougPless. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups, I will be talking about an underlying asset. And setups can be taken with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments, so please feel free to post. And again, if you have questions after the webinar, take up again, the best way to contact me is Doug P on Discord. My agenda for today, what I want to talk about is news items, economic data, and events and earnings for the week. Then I'll go through my positional analysis. Then I'll review a few setups from this morning, and then we'll take a look at the live market. And if anyone has any stocks they want me to take a look at when I get to the live market, please let me know and I'll be glad to do that. All right, so news items this week. There's a lot of minor economic data, a few Fed speakers during the week. So tomorrow, 10 a.m., there's home sales and other data at 10 a.m. Eastern Time. And then on Wednesday, there's PMI data that comes out at 9:45 a.m. Eastern Time and 10 a.m. Home sales. The big event for tomorrow, I think, is for Wednesday, is NVIDIA reports earnings after the market closes. And Spotgamma is showing the expected move for NVIDIA plus or minus 9.5%. So that's the expected move for Wednesday for NVIDIA. And then Thursday, durable goods orders at 8:30 a.m. Eastern Time. That's more of a higher impact data release. And then, of course, the central bank Jackson Hole Symposium begins on Thursday. And then that symposium continues on Friday, and Jerome Powell will be speaking at 10 a.m. on Friday. So the events start to wind up on Wednesday with NVIDIA earnings, then durable goods on Thursday, and then Jackson Hole Symposium with Jerome Powell speaking at 10 a.m. Also, Michigan consumer sentiment is out at 10 a.m. on Friday. So that's how the week is setting up. Excuse me, a little kind of a slow start to the week. Again, and big events beginning Wednesday afternoon. All right, so that is the news items for the week. Now let's get to positional analysis. I'm going to start with the S&P 500. This is the S&P 500 futures, ES futures, in Bookmap. And before I take a closer look at this chart, I'm going to take a look at a larger time frame. So I'm going to take a look at SPX in a 30-day, 1-hour chart. And I know this is the price action is kind of scrunched down toward the bottom of the screen. And the reason for that is the SPX call wall. This may be an anomaly, but the SPX call wall has moved up from 4,600 to 5,000. So I'm showing all the Spotgamma key daily levels on this chart. And I'll take a closer look at the levels for today in a one-day chart in just a moment. But I want to show this chart with all the levels. I'm going to zoom in just a little bit. Again, keeping all the levels. So let me point out the key levels on this chart. First of all, the lower and upper weekly expected move. That's shown with the dashed purple lines. And note that is lower weekly expected move is right around 4,300. And that is the put wall, Spotgamma put wall. More about that in just a moment. So that is the lower and upper weekly expected move. And then here is the lower and upper daily expected move, shown with the dashed blue lines. And so far, SPX is trading in between both the lower and upper daily and weekly expected move. All right, let me get to Spotgamma levels now. So first of all, again, here's the put wall, 4,300. These are all proprietary Spotgamma levels, shown with the dashed solid red lines. First of all, the put wall. That's the strike with the largest net negative gamma that can be expected to act as support. That level did move lower from Friday. So starting last Thursday, that level has moved from 4,400 to 4,350 and now 4,300 today. So that is bearish. I interpret that as bearish. And that is just moving that potential floor for price lower. So that is, again, the strike with the largest net negative gamma can be expected to act as support. And the next level up is the 4,400 level. That's right here. And that is the volatility trigger as well as the absolute gamma strike. Those levels have not moved. Volatility trigger is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And then 4,400 is also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. And then finally, as I mentioned before, the call wall. Again, this may be an anomaly, moved up from 4,600 to 5,000. So it's definitely not in play and not something that I consider in my positional analysis. All right, let's take a look at a shorter time frame, again, just to get a sense for the levels that are in play for today. And really not many gamma levels in play for today. There's this combo 2 level below that combines SPX and SPY gamma into one level at the SPX 4348 level. And then there's the 4400 volatility trigger just above. 4400 is the, if price continues higher, that is the potential target. All right, let's go back to Bookmap. And then there's also the upper daily expected move up at 4405. All right, back to Bookmap. And there are, in this price range, really no gamma levels, just round number levels that are in play. So here's the 4400 level. That is SPX 4400. And then there's the SPY 435 level below. And these are shown in my own cloud notes. Note there is a difference in price between ES and SPX, and I'm using 13 points today. So the 4400 SPX 4400 level is shown at ES 4413. So that is ES minus SPX equals 13 points today. All right, so those are the levels in play. Again, mainly SPY round number levels shown here, and then also ES round number levels. There's the 4400. All right, shifts in levels. For the S&P 500, I mentioned the put wall for SPX shifted lower. So again, shifted lower from Thursday to Friday to today down to the 4300 level. And I interpret that as bearish, that moving that potential floor for price lower. And for SPY, the volatility trigger did shift slightly lower from 445 to 443. All right, so those are the levels in play for the S&P 500. Let's take a look at NASDAQ now. So here's NASDAQ futures in Bookmap. Let's take a look at gamma levels for, first of all, for QQQ, also round number levels. So for QQQ, here is the, let me zoom in on this chart. This is a 1 day, 1 minute chart. There's the 360 level. That is the absolute gamma strike for QQQ. And then showing the round numbers in play. And it looks like NASDAQ is heading up to its upper daily expected move. Let's take a look at an NDX chart. So note that NDX is trading above its call wall, also above its volatility trigger. All right, so that's NDX. All right, let's go back to Bookmap. And really the key support for today has been the NQ 14,800, and I've highlighted that here, acting as support 3 times today. All right, shifts in levels for NASDAQ. First of all, for NDX, all the key daily levels shifted lower. Volatility trigger, put wall, call wall, and absolute gamma strike all shifted lower. And then for QQQ, the put wall also shifted lower from 356 to 350. So the put wall shifted lower for SPX, NDX, and QQQ. And then for SPY, the put wall actually shifted lower on Friday. So then the other indices follow today. And we'll talk about setups in a few minutes. All right, so I've talked about levels in play for today, primarily round number levels. And let's take a look at gamma notional now. This is market maker's position on the gamma curve at the beginning of the day. This is for SPX, SPY, NDX, and QQQ. Note these numbers are still quite negative. For SPX, SPY, and QQQ, although they became less negative today versus Friday. So less negative gamma notional. This is market maker's position on the gamma curve at the beginning of the day. So this means that in this position, traders are long puts, market makers are short puts, and they have to sell futures as price decreases and implied volatility increases to hedge their delta exposure. And then on the other hand, if price increases and implied volatility drops, market makers can buy back short futures, and that is a put Vanna rally, and that can fuel a sharp rally higher. And that seemed to begin on Friday with Friday's expiration, a put-dominated expiration. A lot of puts expired, and market makers could buy back their short futures. And that right now that appears to be continuing after a nice move lower this morning and then a reversal higher right around noon. And we'll take a closer look at that in just a minute. All right, so let's take a look at a graphical representation of that. So this is the Vanna model. This is for SPX. This chart is showing market makers delta notional and how that changes with changes in price. Again, for SPX, there are two curves on this chart. The light gray curve is showing how market makers delta notional changes with changes in price only. And then the purple curve is showing how market makers delta notional changes with changes in price and applied volatility. And that change in delta with the change in implied volatility is the Vanna effect. Vanna is a second order Greek. So what this chart is showing is as price decreases, market makers delta notional will increase. They want to remain delta neutral, so they will have to sell futures to hedge their delta exposure. And that was in play this morning. And then what's in play right now is as price increases, implied volatility decreases, market makers can buy back their short futures. So in both cases, they're trading with price, and that tends to enhance or increase volatility and make for wider moves, bigger moves. All right, let's see where SPX is trading right now. So I've got SPX right around 43.89. So way up here. So it looks like, so right somewhere around here, right where these two lines cross, it looks like this put Vanna fuel for SPX. Let's take a look and again see where the low of the day was. Low of the day around 43.60. So right around here. So has SPX has rallied. We'll take a look at VIX in just a moment. Let's go ahead and do that now. Let's go back to SPX chart. So this was just before noon, this reversal higher. Let's take a look at VIX. And I'm showing 2 days of VIX for a reason. So here's VIX right around that same time that SPX starts to move higher. So prices moving higher, implied volatility drops, market makers can buy back short futures. And this is what happened on Friday. This is VIX for Friday. After a little bit of chop in the morning, VIX broke down below this range, implied volatility dropped, price increased, and those puts were expiring. Market makers could buy back short futures. And that is after some chop this morning and a move lower, now that appears to be continuing with all this negative gamma. Market makers can buy back short futures as price increases and implied volatility drops. And again, tending to enhance or increase volatility, making for larger moves. So this shape of the curve with the strong skew to the left is very typical of a negative gamma environment. Let's just take a quick look at SPY. Very similar curve. And QQQ as well. All right, so Vanna model, Vanna curves, very typical of a negative gamma environment. And although gamma notional did become less negative from Friday, it's still very, very negative at over 2 billion negative for SPY. That is very negative. All right, so my thesis for the day was really, first of all, looking for higher volatility, and then directional bias really depending on whether this put Vanna rally would continue or not. Just based on the shifts in levels lower, my thesis for the day was bearish. All right, so let's take a look at some setups now. I'm going to start with the SP 500. This chart is the hero chart, Hedging Impact Real-Time Options. This is available to Spotgamma subscribers. This chart is showing price for SPX with the white line. And then this is the hero signal, Hedging Impact Real-Time Options, for a combined signal for SPX, SPY, XSP, and ES futures. And if you trade any form of the SP 500, this is the signal that you want to take a look at, combining all of these. So if you trade ES futures, SPY shares, SPY options, SPX options, I really prefer to look at this total signal. All right, let's zoom in on this now and talk about a few setups just based on order flow and hedging flow. So I'm zooming in on the morning session, and I'm showing this is the, right here, this is the cash open, 9:30 a.m. Eastern Time. Excuse me. So what I saw this morning was this divergence starting to develop, a slight move lower in hero, then the sharp drop. So right around here, just before 10:10, maybe 10:09, was a good point for a short entry. Based on this divergence as well as order flow, let's go back to So we'll go back to the S&P 500 and look at the clues in Bookmap for a short setup this morning. All right, so we know that traders started taking negative delta positions, let's say around 10 a.m. And before that, large traders were selling the move up with iceberg orders. That's shown by that falling light blue line. Not large size, but still trading with iceberg orders. Actually, this one appears to be obscured by that green dot, but there's that may be a little bit larger iceberg orders there. So I'm showing the subchart indicator as well as the on-chart indicator. So large traders continue to sell the move higher with iceberg orders. And note that there's also some liquidity, higher liquidity in the order book, right around 4409.10, shown there just above the SPY 439 level. And then finally, there's looks like a stop run right up to this level, and a lot of aggressive buyers. That's shown by the green volume dots, and then aggressive sellers start to come in. So you can very clearly see the shift in the volume dots. Those are market buy minus sell. So aggressive buyers right up to the 09 level, and then aggressive sellers start to come in, and a very clear distinction between the aggressive buyers, the green volume dots, and the aggressive sellers with the pink volume dots. So the clues, we know that larger traders were selling the move up with iceberg orders they used to hide their size. Also, options traders started taking negative delta positions, and then aggressive sellers started to come in. Clearly shown in the order flow there. And then as price started moving lower, there were some sell stop orders that helped to fuel the move lower. Not great size. And order flow continued to be bearish until around 11:45, 12 o'clock. Scroll over. Oops. Sorry about that. And note again, large traders with iceberg orders. And this is pretty typical. All right, Hector 80 says not live, very delayed. Sorry, I'm not sure what you're looking at. I'm watching YouTube as well, and it's probably delayed. It's got to be delayed a few seconds, but not. I would not call that very delayed. So I see price trading just below 4,400, and I see that on YouTube right now. So there are a few seconds delay. So yes, it is live. Okay. All right, so we got that straightened out. All right, so this is pretty typical behavior of larger traders. They are selling strength and buying weakness, and that is very evident with these iceberg orders here. Note the rising light blue line. That is a cumulative or sum of the iceberg orders today. And as price was dropping, large traders were buying with iceberg orders. Not large size again. As price approached this SPY 435 level, and then aggressive buyers start to come in. And you can see the shift from magenta dots, volume dots, to green volume dots. Note also the sharp increase in cumulative volume delta, and then as price starts to move higher, sell stops or buy stops shown by the rising yellow line help to fuel the move higher. Let's go back and take a look at Hero. So order flow, very easy read today. Volume dots, iceberg orders, stop orders, doing everything they typically do. So let's go take a look at, go back to Hero now. So this is where the picture becomes a little bit more murky, is what options traders are doing. So they're not supporting the move higher. So essentially they just stopped, really stopped with the negative delta positions, maybe taking slightly positive delta positions. But this initial move lower was fueled by, helped to fuel by negative delta options positions, was not, that did not happen on the move higher. Let's just see what options traders are doing as far as puts and calls go. So they are buying puts today, and there's a huge difference in the notional value here. For puts, shown by the falling blue line, notional value minus 2.59 billion versus positive 85 million, shown by the orange line for calls. So orange line for calls, blue line for puts. Put buyers much more aggressive than call buyers. And so far in the morning, put buyers definitely had their way, and now it looks like just the aggressive buyers, as well as the large traders with iceberg orders, are helping to fuel the move higher. And so as I already said, NVIDIA been doing well today. We'll take a look at NVIDIA. I think there was an upgrade this morning. And remember, again, NVIDIA reports earnings Wednesday after the close. All right, so that was the setup in the S&P 500 this morning. The short setup, very easy read, confirmed by hedging flow and as well as order flow. All right, let's take a look at NASDAQ. Going to zoom in. So this is a combined signal, just like the S&P 500. This is combining NDX and QQQ. NDX and QQQ options trades into one signal. Let's zoom in on the morning. So this is a very clear divergence setup. Very nice. Just about 10 minutes after the open, options traders start taking negative delta positions, and then price reverses lower. So let's go take a look at order flow in NQ for additional clues. All right, so Kanemoto asked, are you using combined signal for S&P 500 options flow? Right, yes, I use the combined signal, SPX, SPY, XSP, and ES. And of course, Spotgamma provides separate signals for all those instruments. They all have an influence on ES, so I just look at the combined signal. All right, so NASDAQ, very nice short divergent setup. Let's go take a look at NASDAQ now. I'm going to zoom in on this. All right, so the Monday morning dip buyers were definitely in play at the first 30 minutes Monday morning opening, and the options traders, especially for NASDAQ, were definitely fading this move higher after about 10 minutes. Remember, there was a very clear divergence in Hero, options traders taking negative delta positions, and there's also a very clear shift in order flow, just like the S&P 500. Aggressive buyers on the way up, also fueled by stop orders, that's shown by the rising yellow line. Buy stop orders, fueling the move higher. And note also that large traders were selling the strength with iceberg orders shown by the falling light blue line. Iceberg orders, negative iceberg orders here, shown by the on-chart indicator. And price moves lower, again, as options traders were taking negative delta positions, large traders selling with iceberg orders, and aggressive sellers start to come in and move price down from above 900 down to below 800. So a nice 100-point move in NASDAQ. Excuse me, nice 100-point move in NASDAQ. And this is, you can expect that type of move in a negative gamma environment. And note all the way down, sell stop orders shown by the yellow line help to fuel the move lower, as well as aggressive sellers. And once again, large traders fading the move, buying weakness with iceberg orders, shown by the rising light blue line. All right, so those are the setups that I saw this morning in NASDAQ. And now let's take a look and see. We know that options traders not really supporting the S&P 500 move higher. They stopped taking negative delta positions is really about the best you can say. When we looked at it just a few minutes ago. Let's go take a look at Hero for NASDAQ. And pretty much the same thing. So options traders taking negative delta positions, they start taking positive delta positions, and then that levels off and price continues higher. So I thought both the bearish setups in S&P 500 and NASDAQ were easier to read today, supported by both hedging flow and order flow. All right, let's take a look at some stocks. And the first one I want to take a look at is NVIDIA. Big move today. And there was, I believe, an upgrade this morning. And again, remember, NVIDIA reports earnings Wednesday after the close. So here's NVIDIA, Hero Signal, traders buying calls today. And they're also buying puts. Buying calls shown by the rising orange line, positive notional value, just under 400 million. They're also buying puts, shown by the falling blue line. Looks like that activity really pretty much leveled off right around 11:30, and price resumed the move higher. Notional value for puts minus 165 million. So this Move higher in the morning was fueled by call buyers. And then when traders stopped buying puts, right around 11:15, 11:30, price moved higher, continued to move higher. Let's go take a look at Bookmap. Let's go to NVIDIA. Huge move higher in NVIDIA. And here's that deep pullback to 450. And now NVIDIA made a straight line up to 460. Targets in for stocks typically very clear, especially for a stock like NVIDIA. Liquidity comes into the order book right at the cash open typically, especially higher liquidity that's shown by the heat map in Bookmap at the zeros and the fives. And as price moves up, these are sell orders. These are limit sell orders. Traders, again, large traders, or a lot of traders, put these orders in at the cash open. It acts as a magnet for price. And they stay in the order book typically until they're filled. All right, so there's NVIDIA. Strong move higher, up from around 443, almost to 463. It looks like 465 is the next target. So after the open, 20-point move higher. I'm not sure how much NVIDIA gapped up. I think it did. So, well, let's see. I only have data starting at 4 a.m. So I'm not sure how much it gapped up. But big move higher in NVIDIA before the earnings. All right, the next is Tesla. So another big move higher at the open. And it looks like in the first 30 minutes of trade, NVIDIA and Tesla were definitely driving the indices higher. All right, let's take a look at, go back to Hero. Back to the total signal. We'll take a look at Tesla. Similar story, call buyers. So in the case of Tesla, both the numbers are positive. So traders are buying calls and they're selling puts. And the put number is pretty flat. So they're not really doing much with puts. That's positive 364K versus call buyers 288 million. Both positive, so they're selling puts and buying calls. Now the put number shifted to negative, so really that's flat, not significant. So the call buyers, and you can just see right here at the open, the very strong correlation between call buyers and price action in Tesla. And the way that works, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Let's go back, take a look at Bookmap. And price levels off, drops down a little bit. As options traders take a break, they take the foot off the gas, and then around 12 o'clock, 11:50, 12 o'clock, they step on the gas again and price moves higher. Let's go take a look at Bookmap. So there's the initial move higher. Aggressive buyers in Tesla as well. You can see the just all the green volume dots. Didn't quite make the 230 liquidity target. Oops. And now price is heading back up toward that level. And then there's the deeper pullback to 225 as traders, options traders, take their foot off the gas. And then when they step on the gas again, price starts to move higher. And this is really a nice confluence when you see aggressive buyers rising cumulative volume delta, as well as traders buying calls. That's definitely a nice confluence for a long setup. All right, I had one other. So these are really the stocks of the day as far as I'm concerned. The stocks that I trade, the large cap tech, Magnificent Seven. These were the Nvidia and Tesla stocks of the day. Take a look at one other, Microsoft. Let's go take a look at Hero or Microsoft. So Microsoft, long, short, long, strong correlation between hedging flow and price action. In the morning, confirmation long, confirmation short. What I mean by confirmation is the very strong correlation between hedging flow and price action, typically in stocks. This is more of a typical behavior, a very, again, strong correlation. Traders buy calls, market makers respond pretty quickly by selling calls and buying stock. The divergences that I like to look for appear more often in S&P 500 and NASDAQ in the index products. Let's go take a look at Bookmap. So there's Microsoft. You know, of course, not nearly the move in Microsoft as I just showed in Nvidia and Tesla. But still, it looks like a lot of aggressive buyers coming in here. You can see all the dominance of the green dots, the aggressive buyers, market buy orders. All right, so those are three stocks. And if anyone bought an Nvidia call this morning, they're probably doing pretty well. Same for Tesla. All right, let's take a look at the live market. If anyone has any stocks they want me to take a look at, please let me know. All right, so here's ES futures. And price approaching the previous high of the day just after 10 a.m., just below the SPY 439 level. Looks like iceberg orders have been on net slightly selling this move higher. This is why I like to look at the cumulative or sum value in the subchart. And Ben asked, are you taking any Nvidia positions for ER? I assume you mean earnings. And no. I typically don't trade earnings. For I typically just day trade most stocks. That's what I'm talking about here. And then for the S&P 500, I take longer term options positions, selling premium. So those are my primary strategies in my trading accounts. All right, so large traders, at least you could say they've stopped buying. And the move higher, still fueled by aggressive buyers, shown by the rising cumulative volume delta. Dark blue line. Let's go back and take a look at Hero and see what options traders are doing. The S&P 500. So still not supporting the move higher. And Ben, regarding your question about NVIDIA, I would recommend to anyone, if you do want to take an earnings position in NVIDIA, I would make it defined risk. NVIDIA can move quite a bit after earnings, so I would definitely not sell a strangle, for example, in NVIDIA. Definitely make it defined risk. All right, so S&P 500 moving up toward the high of the day. Let's take a look at NASDAQ. And getting a little bit of support from options traders now. All right, let's go take a look at Bookmap. Go to NASDAQ. All right, almost at the upper daily expected move. Move higher, fueled by aggressive buyers and sell stop orders, shown by the dark blue and rising yellow lines in the subchart, and then options large traders fading the move with iceberg orders they use to hide their size. So Truman says, if Hero not supporting the move higher, I'm going to stay out of the way of all the NVIDIA FOMO buyers. So that's the way I feel. I like to see, first of all, I want to understand who is driving price, what players are driving price, whether it's options traders, large traders with iceberg orders, smaller traders with stop orders, aggressive buyers, aggressive sellers. So again, I thought the reads were easy this morning for the S&P 500 and NASDAQ, with a strong confluence of order flow and hedging flow. And that's what I like to see. And then we also showed that in some stocks with aggressive buyers and options traders both being on the same side. And Ben says, of course, thank you, you're welcome. Not trying to chase, most likely will stick to trading futures, and that's pretty much what I'm doing. Again, of course, if you were trading stocks, NVIDIA and Tesla, definitely the trades of the day. So Truman says that is a good idea. Now I need the MBO package. More money, more money. Yeah, it is. This is a business. It's expensive. There are costs associated with the business of trading. I think for futures traders, the stops and iceberg orders included with the MBO package are extremely valuable data. And again, what I'm trying to do is figure out what and who are driving price and get behind them. So that's what I'm looking for, trying to figure that out. So in this case, for NASDAQ, clearly aggressive buyers and buy stop orders. Let's go back to ES. And so far for me, typically the S&P 500 is the easiest read. Order flow, hedging flow. Let's go back and take a look at Hero. So there's NASDAQ. So for the S&P 500, options traders have stopped taking negative delta positions and now really started taking negative delta positions again. So we'll keep an eye on price. All right. Kinomoto has kind of a complicated question here. All right, I will have to I'll have to look at this a little bit more closely. Let me show you. If you're asking about the expected moves that I use, let me just show you what I take a look at. So I'm going to go. This is Thinkorswim, and I'm going to go to SPX. Go to an options chain. So this is the expected move for tomorrow. Right now it's showing just under plus or minus 32 points. So what I'll do at the close, at the end of the day, I'll take the closing price of SPX, and then this number, it'll change a little bit. At the close, I'll take that number and add it and subtract it to SPX. So that's all I do for the daily expected move. So this is something that I can do the night before, so that reduces the things that I have to do in the morning during my morning preparation. So I certainly looking at the Spotgamma implied options move is certainly a way to go. This is just what I know how to do. That's what I've been using for quite a while. And then for the weekly expected move, I can do that over the weekend, and I just look at the following Friday. Or actually, I have a script. And this is not mine to share, sorry, but I have a script that shows this. This is from a couple weeks ago. That's the upper weekly expected move, lower weekly expected move shown by that green line and red line. I just use that, and that's calculated a little bit different. I got that from another organization. So that's what I use for weekly, and then for daily, I just get that from the options chain. So that's what I use, something I can do before, so I don't have to do any additional calculations in the morning. And again, if you have time, it's probably worth comparing the Spotgamma implied move versus this daily implied move from the options market to see which gives you better levels. All right, C asks, do you trade 0 DTE expiration option contracts? No, typically not. I have some, but I typically trade either futures or shares. I'm a long time options premium seller, and I just have a hard time buying options. I was trained to sell options, and I just have a hard time buying options. But that does not in any way make that a bad strategy. For example, if you bought an NVIDIA call today, a Tesla call, as close to the open as you could, you're having a very good day. So nothing wrong with that strategy. It's just me that I prefer to trade futures or shares, so I don't have to deal with that time decay or think anything about it. Let's go back to Bookmap. And my time is up. I'll wrap it up. Do one last check for questions. So I saw Slow Desari typing a question. All right, I'm going to go ahead and wrap it up. If anybody has any additional questions, I'll be able to take those in Discord. Thank you very much for watching. Thanks for your questions and comments. And I will see you tomorrow. Thanks again. Bye.